Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com. And I want to talk about a little trick you can use. I call it the Candlestick Count Confluence method. Now, the Candlestick Count Confluence method is a way to kind of add the probabilities in your favor of at least a pause or a reversal at a level. So what I mean by that is if we count candlesticks, so bullish and bearish, what you'll tend to have is maybe a couple of consecutive bullish or bearish candlesticks, three here, two there, two bullish, three bearish, two bullish, three bearish, two bullish. And even as you have this little downtrend here, you've got, one, two, three, four, five consecutive bearish candles, and then you've got a bullish candle, and then you've got a few bearish candles, and vice versa coming up. So the candlestick count, as you see consecutive candles, is usually about 3, 4, possibly into the 5s. It's very rare that you get it gets rarer as you go to 6, 7, 8 consecutive bullish or bearish candles. As you can see, if we go back again, you can just do a count on your own chart as well and see how many bullish and bearish consecutive candles the average is. It's usually around about 3, 4, 5, possibly into the maybe 6s. Again, it gets less I suppose it's rarer as you get into the 6, 7, 8. So when you see consecutive candle counts into a level of maybe 7, 8, or 9, 10 plus into a major supply and demand or support and resistance level, that should give you some confluence of at least a pause or a reversal, right? So for example, we're on the pound dollar daily chart. So we've got a consecutive candle count into this level of supply of 1, 2, 3, 4, 5, 6, 7, 8 consecutive bullish candles. Now you have to expect there's going to be some pause. I mean, the probabilities are pretty much in your favor. If you think about the psychology, if you were a trader down here and you bought, where are you most likely to take profit? You're going to take profit up here. And if you buy down here, you're going to sell up here. If you're a supply and demand trader or support and resistance trader, where are you most likely to probably try and get short? It's going to be around here. So there's going to be a whole load of sell orders around here. So again, once price reached up here, it's very rare that price will continue into the 10, 11, 12 and really kind of break through a level. So don't be scared when you see this type of price action. I know it's bullish and it looks like you're basically selling into a really strong momentum move, but you've got the candlestick count confluence probabilities in your favor. Don't be scared of something like this. In fact, I love looking for things like this because it gives me the confluence in my trades to know that I'm should be on the right side of the market if we do get a pause, especially if you're trading on the lower time frames. So there's definitely an opportunity to make some money on the lower time frames. Let me see if I can find another couple of examples on some other charts. So here's an example on the New Zealand yen pair from the downside and the upside on the weekly chart. So you can see there was some resistance here, resistance, which then turned to support. Now, as prices came down into this level, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 down weeks into this level of broken resistance, now turned support. So you can have some confidence that people who basically were selling up here are going to be taking profit down here and again, the longer it carries on is the more you should see some, again, a pause or reversal. I'm not saying that you're going to definitely get a reversal here or anything like that. It's just because it also depends on fundamentals and sentiment and what's going on behind the scenes, central bank policy, etc., etc. So, but I'm just saying that the odds are in your favor the longer you see the consecutive candle count. And now we have up to the upside, so we have this area of supply. So we have 1, 2, 3, 4, 5, 6, 7 weeks of of bullishness, and then we get our pause. So then what you would you're more likely to do is look at this level on an intraday chart and then see if you can see your entry and have that confluence behind you that you've had. You're going to have at least some supply up here, again, from traders taking profit from down here all the way up here. You've got supply and demand traders, supply traders, getting in here, support and resistance traders, etc., etc. So I hope that helps. Have a great trading week, and I suppose weekend now. It's Friday. So I'll speak to you soon.